Just from the prior operator and the work that we have done, there's now 21 kilometers of modern underground workings. So, this is a very infrastructure endowed setup. Really fundamental to our approach is that we're tightening that drill hole spacing from 20 meters to 6 meters. By mining those selectively, we expect to be able to deliver resource grade to the mill. We're not delivering a mine plan where we squeeze the asset to try and get the best numbers. We're delivering a mine plan that we know we can do.
All right, today we're having a discussion with Gwen Preston, the Vice President of Communications of West Red Lake Gold, a highly interesting gold mining restart project. When this mine was operational just a couple of years ago, it at one point commanded a peak market cap valuation of $1 billion. Now investors or speculators today can participate for a market cap of about $175 million on the stock market today, while the company expects to be producing gold by mid-2025 already. That might just be an interesting value proposition for you watching, or at least that's what we'll try to figure out today. So Gwen, thank you so much for coming on the show. Really appreciate it. Welcome. Perhaps we can start off with a short and sweet overview from your side regarding West Red Lake Gold.
Absolutely. Thank you so much for having me on the show. Love to talk to new audiences, so I really appreciate the reach out. Yeah, so West Red Lake Gold is a company that came into existence like 2.5 years ago when Frank Giustra, a very successful mining company builder, financier, investor, got to know Shane Williams, who's our president and CEO and has a long, successful history as a mine builder. And they got to know each other and realized that they shared the perspective that we were entering a new gold market. And they also shared the perspective that the best way for investors to benefit in a gold market is through companies that are providing, significant production growth. As the market goes, they're really increasing how much gold they're producing. And so they decided that they wanted to team up and create a new gold mining company specifically for this bull market. And so then they needed to find a foundational asset. So they found that in the Madsen mine, which, as you referenced, had stumbled under the prior operator. That prior operator spent $350 million turning a historic mine into a newly operating mine. And in that, they did a lot of very good work, including 180 kilometers of drilling that defined the resource that we're still working with today, which is 1.7 million ounces of pretty high-grade gold, 7.4 gram per ton resource. And then where their missteps happened was really on how they decided to build the mine, or some of the details in how they built the mine, went about mining. And unfortunately, those missteps were very costly for them, and the mine shut down after only 14 months of commercial operations and went into the bankruptcy proceedings. And so that's when Frank and Shane were able to make an offer. And so we bought the Madsen mine for $6.5 million cash, plus a 1% NSR royalty and a sort of $10 million in deferred payments. And we bought it from the group that had loaned that prior operator the $150 million to build the mine. And so that group, which is Sprott Resource Lending, also got 20% of West Red Lake Gold. So that's how we got to own this asset that is a really interesting asset. So Frank and Shane wanted something that could become a gold producer in this market. So getting something that had the potential to be put back into production fairly quickly, that was really fundamental to their thesis. And of course, the Madsen mine is a rare opportunity to do just that because it was a brand newly built thing. Now, there were some things, like I said, that went wrong, some decisions that needed to be changed. And so that's really what's gone on in the 1.5 years since the deal was signed. We've spent that time, if you want to say, grinding through the work that needed to be done to address those things. And now we're at the point where we're looking ahead to gold fairly soon. We want to process the bulk samples that we're doing in the first quarter. By the middle of the year, we want to be putting, 400 tons per day through our mill. Later in the year, we want to be able to ramp that up to the 800 tons per day that the mill is rated for and worked really well doing under the previous operator. The mill worked really well. So we're nigh on production. Because of the history of the asset, this is a mine that failed only 2 years ago. I think the market, understandably, is a bit hesitant. And so I don't think we've enjoyed any of the market re-rate that often happens as you get close to becoming a gold producer. We can talk about all the reasons for that and all the ways that we're addressing that. Hopefully what we're doing will address those concerns and deliver a successful restart.
That would be great, and I will ask you about that in just a second. But thank you for the great overview, Gwen. Really appreciate that. Perhaps we can start off talking about the infrastructure, because this slide in your deck talking about the mill, you already started referencing at it, trying to ramp it up to 800 tons per day. That's at nameplate capacity, I believe. Perhaps you can take us through what is the infrastructure in place, especially when you found it, and what have you done recently to build upon that infrastructure base?
Absolutely. So from an infrastructure perspective, like above ground, things were really good. Fundamental to that is this mill that you're seeing the picture of right now. This is a great mill, and it's a standard. The mineralization at the Madsen project is free milling gold. It's not complicated in terms of recovery, in terms of metallurgy. And this is a standard gold carbon in pulp flow sheet with a bunch of gravity recovery in there. And this mill worked really well. I think I love to underline to people that even though the prior operator had struggles, the mill was not actually one of those struggles. The mill did a great job of recovering gold from that mineralization, and it ran, it's an 800 ton per day that reliably ran above 1,000 tons per day. So we're very confident in this mill, and the guy who ran it for Pure Gold is now working for us, and he's the one who's prepping it for restart. So there's a lot of continuity of knowledge there too, which is fantastic. So the mill is there, and I mean, just as a touchstone, the previous operator spent about $350 million on this project. I mean, just to build this mill today would probably cost a good chunk of that $350 million, right? So very valuable asset for the money that it would cost and the time that it would take if we were in a position that we needed to build a mill. We're not. That's great. Also on surface, tailings dam permitted, in place. We needed to do a lift, but we've accomplished that. We did that this summer. Water treatment facility operational, with its polishing pond. The other, core shack and the other things that you need on surface, all there. And then the other key part of infrastructure for an underground mine, I don't know altogether, including all the historic workings, how many kilometers of tunnels there are there, but even just from the prior operator and the work that we have done, there's now 21 kilometers of modern underground workings at the Madsen mine that give us access to big chunks of this resource. And historic operators from the late 30s to the 70s also drove a shaft all the way down to 1,300 meters to access something called the 8 zone, which is in a slightly different rock type and is a much richer zone of mineralization. It grades about 3 times the gold grade of the main zone at Madsen. So there's a shaft that's already there, and lots of historic workings and 21 kilometers of modern workings. And 2 portals. So, this is a very infrastructure endowed setup. When I say we needed to, they were looking for something that could be put into production quickly. That's what this kind of infrastructure does. Think about the fact that it costs over $7,000 to do every meter of underground development. That's our cost right now, because we've been working underground for the last year. And so 21 kilometers of underground development. And it's also very slow, We're pushing, we now have our crews up to about 25 meters a day of underground development. But think about the time and money for that 21 kilometers of access to the deposit that we have. So that's what we walked into. Obviously, there were other things that we needed to add to that setup, and that's all part of the conversation of sort of what went wrong with Pure Gold versus how we're approaching the opportunity.
Great, and that of course leads me to what went wrong with the previous operator. You already started hinting at it, but please take us through what did go wrong there. Why did the company go bankrupt eventually? And perhaps we can also talk about what you're doing differently to mitigate that.
Absolutely, that is the investment thesis, right? If I'm suggesting that, and I own lots of this company, if I'm suggesting that it's a good investment opportunity, that is the question. The way I describe it is that the prior operator failed to deliver mineralization to the mill that was of sufficient grade. They expected in their feasibility study to deliver 8.5 gram per ton average to the mill, and they actually delivered about 3.5 gram per ton average. So you don't need to be sort of deeply mining knowledgeable to understand that that's a pretty weak starting point. So there was that side of things, which was an understanding of the resource and mining method issue. And so their grade was too low and their costs were too high. And on the cost side, that really stemmed from they'd squeezed the amount of money that they were spending on the build, and that led to situations that caused higher costs. So let me dive into those two sides of things, the grade and the cost sides of things a little bit more. On the grade, I mean, I referenced that the prior operator did 180 kilometers of drilling. Sounds like a lot of drilling, and it is a lot of drilling, and that defined the resource. But that resource is defined on drill holes that are on average about 20 meters apart, which in some mineral systems might be a sufficient drill density, but in Red Lake, it is insufficient drill density. These are narrow veins, and in these narrow veins, the gold is not continuously spread along them. There's like a pod here, then there's a barren section, and then there's a bigger pod, and then there's maybe a big section that doesn't have any. And if you just mine the entire resource envelope and overmine it, so take some of the rock that's around it, because you're going for more tonnage rather than selectivity, then or you're taking a lot of rock that isn't mineralized. And that's really what it is. So the mineralization got away from them. They didn't, because of their lack of definition drilling, they didn't have a very good hold on exactly where the gold was. Our really fundamental to our approach is that we're tightening that drill hole spacing from 20 meters to 6 meters. So if you think about that in sort of 3 dimensions, think about how much more information we have about the mineralization with all those additional drill holes. I mean, we've done 45,000 meters. We've done our own 45 kilometers of drilling just in the last year. To accomplish that task. And so we're tightening that drill hole spacing, and we're identifying where those lenses of mineralization are, and then we will selectively mine those, as opposed to mining the entire resource envelope plus with some overbreak. And that's really the difference in how we expect to be able to deliver resource grade to the mill. I'll just tie into that a little bit more. You know, as we define those lenses within the resource envelope, those lenses are higher grade than the average, because the average includes the unmineralized stuff that's between the lenses. So we're identifying lenses that are higher grade than our 7.4 gram per ton average. We plan to mine those selectively. We will, dilute, that's part of mining, but by mining those selectively, we expect to be able to deliver resource grade to the mill. Our resource grade is 7.4, so that kind of grade is what we are planning to deliver to the mill because we believe we have a very good hold on exactly where the gold is, and then we're very experienced miners who know how to mine that gold. So that's the grade side of the problem. The cost side of the problem, I mentioned that the prior operator tried to build the mine on a very constrained budget, and that had 2 significant impacts. One is that several things that would have been included as capital costs, as construction costs, got pushed into operating costs because they were trying to squeeze the construction budget as small as possible. So, I mean, think about leasing things that you might otherwise have bought or built, right? So they didn't build a camp. Instead, they rented accommodations in the town of Red Lake, which they didn't get a great deal on. Think about a primary crusher that they didn't buy and install, but instead they leased. All kinds of things, they made that decision. So that, sure, brought their construction costs down, but it did very much boost their operating costs. And then the other fundamental for mining, you got to deliver to the mill the grade that you expect, and you have to move that rock as efficiently as possible. That's fundamental to mining, right? And their squeeze on construction capital means that they didn't do quite a few projects that would have enabled them to mine and move that rock more efficiently. Instead of saying what they didn't do, I'll say what we are doing to try and improve some of those situations. So we are, for instance, connecting the 2 sides of the mine. The prior operator had a plan to develop a new, modern, large, smooth ramp portal that's called the East Portal. It's right beside the mill. They started that, they made the portal, and they did a little bit of the tunneling, and then they realized that their construction budget didn't really give them the opportunity they didn't have the time and money to finish that project. So they switched and went back over to the West portal, which is the historic portal. And they did all of their mining out of the West portal. And from this image that you've pulled up, I mean, think about how much tunneling you have to do, how much driving you have to do from the West portal through McVeigh, down into South Austin, over into Austin if you're trying to do that mining. That's a lot of driving on historic, twisty tunnels that are sometimes steep. And then you come out the West portal and you have to go across 2 public roads and drive sort of east to make up all the distance west that you just drove. Going across public roads means you've got to drop and reload the ore into insured surface trucks. Using the West portal was a very inefficient way of moving material. So that green line there is the connection drift. It's a 1.2 kilometer tunnel that we're driving so that we can use the lovely, large East portal that has smoother ramps. We can use larger trucks. It's right beside the crusher. It feeds right into the mill. We don't have to dump and reload the ore. That's the kind of capital project. That's a $10 million project. That's the kind of project that we are doing in advance of mining to set ourselves up for success. We're building a camp so that we're not trying to house workers in and around the community. We're building a maintenance shop so that we can attract really good mechanics and by telling them that they'll have a shop to work in and they don't have to lie in the snow and the mud to work on vehicles, which really matters because you need good equipment availability. If you want an effective underground mine, you need your equipment to be available 75, 80% of the time, not 40 or 50% of the time. You need good mechanics for that, so we're building them a mechanics shop. These are the kinds of capital projects that we're doing ahead of time to set ourselves up for efficient operations. So those are the 2 sides of what went wrong, and those are our answers to them.
All right, I think that's a great overview, Gwen. Really appreciate that. Perhaps we can then dive into what your restart strategy actually is. You've talked about how you're mitigating the steps of mitigating the mistakes that your previous operator has been making and how you want to solve that. But what is the research strategy? How, when, and how are you going to be producing gold?
Absolutely. So 2024 was really about getting a lot of this work done. Like I said, 45,000 meters of drilling. We're halfway through this 1.2 kilometer connection drift. We've done the tailings dam lift. There's lots of capital. The camp is half constructed. Lots of capital projects and lots of just that definition drilling and mine engineering so that when we restart this thing, we have 18 to 24 months of stope engineered, access engineered mineral inventory ready to go. You don't want to be scrambling for what tons you're going to mine and how you're going to mine them, especially in an underground mine. So that's been our focus in 2024, is having 18 to 24 months of that inventory defined, engineered, in hand, ready to go. So 2024 has been that grind. As that has set us up for 2025 when we're able to make good on this restart promise. So we are currently test mining. We started that program maybe 2 months ago. We're about to take down our first stopes. So we've been developing the access, the above and below tunnels to each mineralized area for the last 2 months. And now we're about to start actually taking down stopes, which is really exciting, our first sort of real mining. We're going to stockpile those bulk samples. Those are bulk samples, and we're going to stockpile them on surface. And then in March, we will process those bulk samples through our mill. So that will also get our mill up and running, make sure that that works as well as we certainly expect it to. That'll be a really important moment, because if I say that the whole thesis here is that better understanding of where the gold is through definition drilling and more appropriate mining methods will enable us to deliver grade to the mill as expected. By processing our bulk samples, we will be able to provide that reconciliation data. And assuming that it works, then that should provide some validation of the thesis to the market, right? That should be the market saying, oh, this Madsen resource that we got so excited about a couple years ago. You said the prior operator got their market cap to $1.2 billion because people were so excited about what a new Madsen mine could be. If we can demonstrate that we can operate in a way to make that dream a reality, then hopefully, that adds some credibility to this entire approach. So process the bulk samples in March, and then we're going to roll from test mining into production mining. We're going to develop a stockpile on surface. By the end of April, we want to have 10,000 tons of stockpile on surface, and by the middle of the year, we want to start just pushing mineralization through the mill. We're not going to blow a trumpet and say, we're in production. We're roll in and do it, because we're operators and that's what we're going to do. And so by the middle of the year, our internal goal is to have sort of 400 tons per day going through the mill. And then we have the second half of 2025 to ramp that up to the 800 tons per day. That is the actual, planned throughput for the operation. So this is all happening. It's all happening like starting very soon.
It is definitely very exciting. Perhaps we can actually also talk about what kind of ounces per year we should expect with that mill. We know 400 tons per day at the start, 800 tons per day at some point next year. Can you translate that for us into ounces with your grades?
Absolutely, sort of. And I say sort of because, I referenced how the market has some questions about the asset because it failed, totally fair. The market also has some questions because we have not put out our official mine plan into the market. So we haven't put numbers to those exact questions. That study is it's in our hands. We're back and forthing on the final details. It's going to come out probably in the first week of January. And then I'll be able to answer with absolute clarity, how many ounces per year, what the cost of those ounces will be, how many years of reserve we've defined, what the internal rate of return is on the asset. Those numbers are all imminent. What I can say right now is we're developing a mine plan in this pre-feasibility document that we are absolutely sure we can deliver on, because we need to hit every parameter out of the park, right? Or in order to address the skepticism. And that's fine. So we also know that, an underground mine that has been mined once or twice before isn't the easiest opportunity, especially in the first year or two. So we're not delivering a mine plan where we squeeze the asset to try and get the best numbers. We're delivering a mine plan that we know we can do. So that's what the pre-feasibility study is going to be. It's going to come out at the beginning of the year. I mean, think of Pure Gold when they originally had their mine plan, 65,000 ounces per year. That's right in line with the analysts who are looking at our stock and have their models out. They also come in at that 65,000 ounces per year. So that's a reasonable expectation.
Well, great. Definitely exciting to see that PFS come out in the new year, so we'll keep our eyes open for that. Perhaps we can switch gears towards exploration. We've been talking a lot about putting this mine into production, but you're actually also exploring quite a bit on the side. I believe the upper 8 target is something you're focusing on a lot. Can you take us through why you're doing that at this stage, even though you have a resource that's quite adequate at that pace for quite a few years of production?
Absolutely. And I mean, the short version of that answer is that sort of reasonably conservative initial mine plan is really what we think Madsen 1.0 will be, right? But we see a lot of opportunity for Madsen to become bigger than that in the not very distant future. And so I think advancing those opportunities and making sure that the market understands that potential is right there is really important, especially as we go through 2025, making the Madsen 1.0 a reality. We really want to also advance the next round of Madsen, putting words into action and making sure the market sees that. So what's the next round of Madsen? Well, our resource average is 7.4 grams per ton, which is a lovely grade relative to gold mines in the world, for sure. The things that often make underground gold mines of this nature, really shine is when they can find or incorporate higher grade material. So if we can start at 7.4, but then we can pull in some other zones of even higher grade material, that can really juice the economics. If you look just 30 kilometers away at the Red Lake mine, which is now owned by Evolution, but it's the mine that made Goldcorp into Goldcorp, that was a 50,000 ounce per year producer, 53,000 ounce per year producer in the mid-90s. Then they discovered the high grade zone, where the grade averages 70 grams per ton. It's hard to even wrap your head around that, but 70 grams per ton. And with a few years, that mine went to a 500,000 ounce per year producer. That's what created Goldcorp. I'm not saying that we're going to find a high-grade zone. I mean, it is only 30 kilometers away, and it's the same kind of system. But we want to see if we can find one. And we have sniffs. So the 8 zone, that thing that's deep in our mine that they drove the 1,300-meter shaft down to get to, is really similar. The high-grade zone, like the 8 zone, they're both in the ultramafic rocks instead of the volcanics that hold the rest of the mineralization. They're multiples of the grade of the resource, so our 8 zone averages 18 grams per ton versus 7.5. And so the 8 zone is part of that initial mine plan, but we have to dewater, we have to develop down to it, we have to rehabilitate part of the shaft. So it only comes in, you can expect that it will only come into the mine plan later in our initial, in our Madsen 1.0 mine plan. So our team was like, well, what about up dip from Madsen? We see good opportunity, or from 8 zone, we see good opportunity to extend it down dip. That's a later in the mine life situation. But what about up? So our team tracked that different rock unit up dip to a point where only 300 meters below surface, a structure crossed it that's the same orientation as that 8 zone. And the first 2 of 3 holes returned like a 20 gram intercept, a 44 gram intercept. So that was very enticing. So we put a dedicated rig on that. We've now reported results from 11 holes, 8 of which returned intercepts. And, 5 of those intercepts were pretty splashy. And there's still some more holes yet to come. There's another, I think, 5 holes yet to come from the upper 8 zone. Now, that can probably turn into a inferred level resource in not too long. Now, think about if we can get an 8 zone type resource there that's not that far away from Madsen, and it's very close to surface. It's probably an area that we could mine in the next few years. That makes a difference. If you can either replace 200 tons per day of your mill feed or add 200 tons per day to your mill feed that, has 2 or 3 times the grade, that makes a difference. Similar opportunity exists with our Rowan project, which is 30 kilometers away as the crow flies. It's sort of 80 kilometers if you're driving a truck. There's other opportunities to maybe make it some shorter version of that distance. The inferred resource at Rowan grades almost 13 grams per ton. It's 12.9. So this is the vision that we're going to wrap around this. How do we pull Rowan mineralization in? How do we, if it fleshes out, incorporate 8 zone? I think fairly soon you're going to see news on our Fork deposit, which is a deposit that exists. It's just, down to the southwest of the Madsen zones. It's a sort of a modest grade 4.5 gram per ton zone that's down there right now. But we took another look at that and we identified a portion of that deposit where the average grade is much higher. So let's wrap that into Madsen 2.0. So, and then just like we have Fork and Madsen, we also see opportunities continuing along the strike to test some cool targets that are to the northeast. And so we've done initial tests of those targets. We've gotten some pretty interesting sniffs. So we haven't hit anything dramatic up there as yet, but we definitely want to keep looking, because the 2 reasons to put Madsen into production are to produce gold into a phenomenal gold environment and hopefully deliver to our investors the re-rate from developer to producer, but also to see what else these Red Lake rocks can deliver to us and let us turn this initial mine into.
I think the upside potential here is definitely very clear, Gwen. Really appreciate that. Perhaps last thing I can ask you about is actually your balance sheet. A bit less exciting. When I go through it, it is very clean. There's 26 million in cash and cash equivalents. There's an interesting gold-linked note on there of 33 million. Very interesting from an investor perspective, of course. How is your current funding situation with that balance sheet as it was in August? And how much more capital is required and what are the plans to get it?
Absolutely. Very important question at this point. So we're in the most intense part of the spend to get this project back into production. I mean, when I talk about test mining, connection drift, getting access for the drills to keep doing the definition drilling, I mean, we have 2 or 3 underground crews going 24 hours a day. We have two underground drills turning. We have crews getting ready to restart the mill. We have crews building the camp. We have crews, right? There's a lot of projects underway at site. We're in the most intense part of the spend that's needed to set ourselves up for production. A couple months ago, we did a very detailed restart budget and determined how much we needed to get ourselves. What was our cost to complete? What is the cost, including contingency and working capital, to get this mine to the point where it is doesn't require external funding anymore, where it is self-sustaining, and then we're in the ramp up to where it starts, generating cash flow for us. And so we determined that number, and then we went out. And that's the news that came out at the end of October, where we announced a combination of another financing We ended up closing on $27 million financing in the latter part of October, and we announced a $35 million US debt facility with Nabari. Now that's still the definitive terms on that we're still working on. It's progressing. We have calls on that every day, and we're making good progress on that. But those two pieces together, that additional equity raise and that debt facility, those match the cost to complete number that we created internally, which is a complicated way of saying that we expect we have access to all the capital that we need to get this thing going again. Did you like how long the answer was when I could have just said the last sentence?
Yeah, but all the detail is what people are here for, Gwen, so I really appreciate that. Actually, the last question I want to ask you is regarding Frank Giustra, of course, one of the founders of this company and a very famous person in the commodity space. Perhaps you can talk about how he's helping getting access to this capital and what his role here is.
Absolutely, and I mean, what you just referenced is one big part of it. So Frank is very good at many things. Lead among those are timing. So, seeing the gold bull market coming 2.5 years ago, that is Frank once again showing his ability to understand gold. So that was really useful. I mean, I believe that in a few years we're going to the market will look back and see the deal that we did on Madsen as like a standout deal. Like we were contrarian. People didn't like gold. People hated Madsen, but we saw the opportunity and we went for it. So timing for sure. But then Frank also just he has incredible connections to capital of a variety of types. Like that gold linked note, that idea really came from him, and he really helped market that deal, and we had a huge amount of interest in it, and he took down a chunk of that deal as well because he was a believer in gold, and it was a great exposure to gold for those who believed in the gold bull market. So access to capital, absolutely, and then also just sort of deal structure or how to go about finding our next asset, and that's something that I'll speak to for just a moment. Frank and Shane didn't get together only to build a single asset producer. Their vision, our vision here at West Red Lake, is to build a new gold producing company. Internally, we want that to be a few 100,000 ounces of gold produced, annually in just a few years. We'll ramp Madsen up, we'll expand Madsen to the extent that we can, but it will very likely require also buying another asset, and we're already looking. We made a bid on an asset already that, to be honest, was a few times our market cap, and the fact that we were able to do that relates to Frank, right? That relates to his access to capital, the credibility that he brings, the doors that he opens, the ideas that he has. So yeah, Frank's a really important part of this story. He's not a day-to-day technical guy, but that's okay because the team that we have here are mining engineers and geologists and people who cover that requirement. Frank helps on the access to capital, the vision, the deals, and just helping drive the story.
Gwen, I think that was a great overview. Thank you so much for your time. I really appreciate it.
Thank you so much for having me. I hope we can chat again soon in a few months when I can relate back on success and some of these things that we've discussed.